Okay, good morning to everybody who's joined us here today at the TEK-Ocean Group shareholder webinar. We're here to have a bit of an update on the IPO schedule and fill you in on that. And Brendan Brown, the chairman, will give some coverage of that, followed by Jordan Glanville, General Manager Operations, who will give us all an update on current and recent activities. So I'm going to hand it over to Brendan. If you'd like to take it away, please.
Yeah, thanks for that, Peter. Firstly, I'd like to apologise for perhaps the delay that we've had in presenting to shareholders and stakeholders over the last several months. It's been quite a lot of work that's gone in the background, which you probably aren't aware of. But this presents an opportunity to actually re-engage with shareholders now. We've lodged our prospectus, and we've got 3 members of the senior leadership team available for questions and answers afterwards. And so we'll go through the presentation now. So if I could ask you, Nick, just to go through the next couple of slides. There's a disclaimer, which of course you won't have time to read that fully, but read it certainly after this presentation. Now, this is where we're at in terms of the offer. So if we go to the offer slide. Okay, so at the moment, the company is looking at raising somewhere between $5 million and $8 million of new capital to fund investment in the vessel that we own, the TEK-Ocean Spirit, and also some subsea equipment and fund working capital. The bulk of the cash is going to be applied towards the vessel and subsea equipment, where we can see some substantial opportunities in the future in relation to the decommissioning work that's has been talked about much in the press, as well as some of the renewables work. But primarily, we're targeting decommissioning work, which the company has a track record already in dealing with the blackback decommissioning and the Seahorse Tarwine decommissioning we were both involved with, as well as doing the first contract associated with the renewables offshore wind farm, offshore Gippsland, which may or may not happen, but we certainly were the first party in Australia to be contracted to do some work there. So what I've got there is, right at the bottom, you can see their enterprise value. We're looking at floating the company at a valuation of about $20 million plus cash. So that's the valuation on the business. If we can go to the next slide. Okay, so we launched the prospectus on the 16th of July, and we're looking at indicative timing of trading of the shares on ASX in the order of about the first week of September. So we've got an exposure period with ASIC, which takes about 14 days, and then we'll do the institutional offer, which is already, in terms of book build, has started, and we're looking at the retail offer following ASIC's acceptance of the prospectus. To date, we've not heard anything back from ASIC, and we've already had, in principle, support from ASX in relation to our draft submission for listing the company. If we go to the next slide. So what I'm going to do now is hand over to operations. The way we've structured the company is we've got a senior leadership team, which comprises Jordan Glanville, who will start talking. He's in charge of all operations day to day and running the business. Rod Hislop is the CFO, and also John Clancy is head of new business and business development and sales and marketing. So I will hand over to you, Jordan, now, just to give the shareholders an update on basically what's happened over the last 6 to 12 months. And how you see the outlook for new business going forward. And you may actually want to tag team with John and Rod on various matters.
Yep, thanks for that, Brendan. Yeah, so I'll go through the operation sort of by business unit. I think it's a good way to do it. On the marine side, we've been targeting the ad hoc charter market for the vessel. So, I mean, this market was subdued last year due to COVID and some of the delays that we saw, and that was covered at the AGM. However, we've definitely seen it improve this year. So that's resulted in several charters to different clients in Bass Strait. for the first half of this year, which is really promising. We conducted quite an interesting range of services with the vessel, including ROV and subsea works, as well as what's called hyperbaric rescue vessel services. So that's provision of a safety standby for diving operations out in Bass Strait. So quite niche operations, and they all performed exceptionally well. So we're very happy with the way that that's going. And as Brendan alluded to, a significant portion of the IPO funds are looking to upgrade the vessel to increase our capacity, capability, and marketability to target our key areas in the decommissioning space. So in support of that, the vessel's currently en route to Singapore for dry docking. So that's class docking, but also looking ahead to upgrades, which is very exciting for the company. On the logistics side, it has been incredibly positive for us over the last 12 months. So we are the lead contractor in Geelong supplying the supply-based services for Beach Energy. So we provide all of the services out of Geelong Port and manage subcontractors as well. So this is a long-term steady contract for us, which has been performing really well. So what's been really positive to see out of that is a lot of spin-off works, which have, I think it really encapsulates our end-to-end service as a company, which is our sort of key differentiator, I think. So, I mean, we've been providing the supply-based services, but we've also ended up having vessel charters, oil field services over in the west working in the same area, as well as subsea and consultancy, which is really positive to see and sort of a key part of our business strategy. And what's really promising about the Beach Energy relationship is that they're our one of our key clients, and they have a very significant pipeline of work in the region. So there's the existing drilling campaigns happening in the Otways, but if you look on their site, they also have significant further development plans, which should be progressing for quite a long time. So really good bread and butter work for us there. You can jump to the next slide, Rob. Subsea services and engineering and project management. So as we covered in the AGM, the second half of last year was extremely busy in the engineering and subsea space with the plug and abandonment campaign for ESSO. So this was the plug and abandonment of 2 subsea wells in Bass Strait, which is again extremely important for our future growth and where we see the significant areas for exponential growth in these sort of services around Australia and beyond. So there's been some closeouts of those works pushing into 2021. Sorry, I'm forgetting which year we're in, which has been good to see. We've had continued other project work for other clients across the country, sort of expanding our client base in the consultancy side, and we're also supporting heavily the business development to achieve our goals of growth into the decommissioning area. On the back of that, we've also got consultants continuing to support developments on both sides of the country, which is very promising. Oilfield services over in the west, continuing to support drilling activities around Australia, including, as I alluded to, work in the east, which is good. So a good spread of customers, and also supporting a few smaller niche operators, which is good to see. It helps with spreading our client base, which has been very positive. On the renewables side, as Brendan noted, we continue to support TEK-Ocean, so Star of the South being the offshore wind farm proposed for South Gippsland. We've been working on that project for coming up to 2 years now, as one of the first operators in Australia doing any physical works on offshore wind. So what's exciting to see there is, especially in recent months, there's been a real groundswell of support for offshore wind in Australia, which we hope to springboard existing runs with some of these. So it's an exciting time for the industry, and certainly we feel well placed to develop and capitalise on that growth, having some runs on the board. Next slide, Rod.
Oh, well, the next slide will be me.
Oh, okay. Yeah.
Thank you. This slide is a good pictorial representation of the revenue and EBITDA growth trends since inception of the business 13, 14 years ago. In both cases, it shows a solid upward trend, particularly if you look in the last few years. FY20 compared to FY18 is up about 10% in revenue and substantially up in EBITDA. Now, FY20, of course, was the first financial year that, well, the globe started experiencing the issues associated with the COVID pandemic. It also coincided at the same time with a significant drop in the oil price. In light of that, we were still able to perform 10% better than FY18. So it's a good representation that the company is able to manage well through these trying and testing times. FY19 is got a nice revenue spike and EBITDA spike. That's largely project driven. And of course, there's base work and project work, and we hope to continue to engage and win project work. The last bar on the EBITDA slide is slightly shaded. And the reason behind that is just to represent that in FY20, due to the COVID pandemic, the vessel coming off a long-term charter and the oil price at the time, the board believed it prudent to take a vessel impairment at that point in time. So there was a $6.5 million write-down to the vessel at that point in time. Of course, the vessel is the company's key asset, and it's what the directors are directing the primary use of the funds towards positioning the vessel to be in a very good position to win decommissioning work in that growing market. So I just want to move to the next slide. These are pro forma numbers. The company has strong gross profit increase over the years. It's not a manufacturing company, but it still has a very high gross profit margin and generates positive EBITDA. Statutory EBITDA in FY20 was negative, but actually that included the impact of the vessel impairment. So when adjusted for that, you can see that EBITDA is quite positive amongst the various years. So it's generating cash on an operating level. In fact, its free operating cash flow per share is quite substantial. So this is your EBITDA adjusted for your CapEx and interest expense. So on a price per share, it's generating about 25% cash per share versus the offer price of 50 cents. Its EPS, earnings per share, that's a pretty straightforward calculation. But what also it shows is on a price to earnings ratio, that number is around 6 or thereabouts, which is a very good indication of value of the share. So it's trading or has performed well, generating significant amounts of cash per share over the years. This slide represents the various business units that we have. What's an interesting slide is the comparison between HY20 and HY21. What this does is it shows that HY20 had no COVID impact, whereas HY21 was the first sort of 6 months of the impact of COVID on the global economy. Yet the two revenue figures are about the same. And what again does show that the company is well diversified and able to manage in these testing economic conditions. So this is testament to the value of the company and how it's run, that we've got a well diversified business unit and are able to manage that in testing times. So it's still increasing in revenue. And even though, like I said, FY20 is not as high as FY19, it's still 10% higher than FY18, which is a good baseline to compare it to, given that the FY20 year had a lot of the impacts of COVID and the oil price slump. So yeah, that's just a quick summary of where we have been in the last couple of years. Sean, there we go.
Yep.
Okay, thanks guys. Hey, look, just a couple of notes, I guess, looking more across the industry. And on the conventional space, a good reference point would be the ACCC gas inquiry report. And what we see there probably is what a lot of the listeners have probably picked up in the industry themselves. And that is demand is got a slow growth for the next 10 years, but supply, especially on the East Coast, is dropping off in 2024. So we see, continued investment in our oil and gas industry in the region. And that's largely driven by a change over the last couple of years, right? Where there's been a focus on renewables, and COVID's obviously impacted the oil price. Now, as we look forward to decommissioning, we've not seen any change in this forecast. So Wood Mackenzie in 2020 estimated a spend in this part of our business of 40 billion over the next 30 years. with exponential growth across that time period. And I guess what we've really seen is that actually mirror exactly the outlook that Wood Mackenzie had portrayed. And you can see that through the regulator NOPSEMA pressing 3 operators in the last 6 months with notices to progress their decommissioning activity. So we definitely see our market in the decommissioning space coming at us really fast, and we're well positioned to capitalize on that from our past work, and obviously the investment we're going to go forward with after IPO. Next slide. So our growth focus, as the guys have picked up on that.
John, just to interrupt, I mean, yeah, John, I think it's a really important point, that last slide, because it shows, I mean, you've got half of Australia's installed capacity in oil and gas in the Gippsland Basin, right, which is at a super mature stage. And we've got a track record with SO and decommissioning some of their plant and equipment. So I think for us, you know, round numbers, yeah, we should be addressing almost half of that decommissioning market, and it's going to happen earlier in the areas where we have a strategic advantage. Yeah, so we're in a good position going forward, which is why we're trying to repurpose the vessel to be able to provide cost-effective solutions to our clients, rather than having to pull a rig in and actually do the work at $500,000 a day. We could offer it as, you know, $120,000 a day, the services, and that's really where we're trying to position ourselves. Yep. And there are 180 exploration wells which have not been decommissioned properly offshore Victoria. 180, which all need to be cut off below the mud line and decommissioned. So there's a massive amount of work, and it's driven by not the oil price, by regulatory inflation. And that is what is happening now. And that's why the company has a great future in terms of this sort of opportunity. So I didn't want to interrupt John, but you did a great explanation, but I just wanted to sort of just add a little bit of that so the shareholders can digest that. Yep.
Great spot. Thanks, Brendan.
So I'll hand back to you, John. Yep.
Okay. Hey, maybe just to close off on the last slide, I was just going to mention there, you know, in terms of our current business, we see it unchanged. We're going to be listening to our clients and delivering great service. And the decommissioning space, as mentioned before, you know, a large proportion of our investment is going to go into TEK-Ocean Spirit, and fantastic growth profile in the decommissioning space. I guess, Peter, hand back to yourself for any questions.
Thanks, John and Rod and Jordan and Brendan. That's a great snapshot for everybody this morning, and I'm looking forward to conducting more of these with you post-listing, and as we go through and presenting further milestones by the company. I love that shot with the big ship in the slipway. It looks great. We do have one question here that's come through. A question about FY21 results. When do you expect those to be available?
FY21, sorry, was that somebody else? FY21 will be available in, we have to make a an announcement to the ASX at the end of August, draft results. Then by September, we have their financial results finished.
Thanks, Rod. A good question here about the vessel. And perhaps this is a good thing to address, the age of the vessel and other competitors in the space that Ocean Tech Group is operating in. Would that be Jordan? You're on mute.
Yep, sorry there. Technical issues. Getting a bit of feedback as well. So the vessel itself, the hull is 30 years old. It underwent significant upgrades on the TP systems and other systems around 2011. So yeah, significant upgrades in that time. And you know, we're also looking at significant upgrades as post-float to target these areas. So certainly the age, once you're into that deconstruction area, and subsea support services isn't a concern for us. Competitors, where we're looking to to place the vessel is what we consider a niche in the market for a lower cost operation to target these works, whereas typically with competitors they'll be much higher day rate vessels, significantly larger with more spreads of people. So making it fit for purpose and cost effective to hopefully create our own niche in the area.
Okay, there's a couple other questions here which I think I'll forward through privately or offline. And if anybody else has any other questions that they'd like any of the members of the team here to answer, please send them through to me at peter@nwrcommunications.com.au, and I'll make sure those questions go through to the right people. So I think we'll wind it up here, everybody. And I'd like to thank all attendees this morning, as well as all the presenters. I'm just copying that question there. And we'll look forward to coming back via this platform to present more information as we come through the IPO to this successful listing, and then onwards from there. So thanks for everybody being here today, and we'll look forward to seeing you soon.
Thanks, Peter.